live. Yay, we're live now. It's 8:59. We're not quite at the 9 o'clock hour, but we're getting closer. So let's jump over there really quick so you all can see that we're at the 9 o'clock hour. Okay, so it's 9 o'clock. Today is Tuesday, January 17th, 2017. And we have a very interesting show for you tonight. Not a whole lot we're going to go into because on Tuesdays we do dividend capturing. Now, dividend capturing is where we buy the stock just before the EX date and we sell after the date of record in order to collect the dividend. Why do we do this? Well, basically over 3,500 companies every single year share their profits. Part of the profit sharing is dividends. They give a portion of the profits back to the shareholders or the people who buy the stocks. So if you buy the stocks before the EX date, I'm going to explain that to you in a minute, you are entitled to capture that dividend, to get a dividend check sent to you. You get a dividend for each and every share you own. So if you own 100 shares, you get that dividend times 100. If you own 1 share, you get that dividend times 1. If you own 1,000,000 shares, that dividend times 1,000,000. So on and so forth. So the more shares you own, the more dividends you receive, or the higher the check will be. Now, I'm going to explain to you where to find them, how to find them, and what to do with them once you get them. Now, why do we do this? Because this strategy is very old. It's been used for over 400 years, since the stock market started back in the 1600s. People would buy a stock, they would hold on to it, they would get the dividend, and once they collected the dividend, they would turn around and resell the stock, most of the time for the same amount of money or more than what we paid for it. That allows you to get that dividend and then move on to the next company. Why do we do that? Because we want more money. Plain and simple. I don't know what easy way to say it. You want more income, you need to do more trades, find better trades, however you want to do it. This works for me. It's easy to teach, and it's relatively very safe. I say relatively because you're going to be buying the stock anyway. Good, solid companies that pay their dividends, share their profits with their stockholders, and if you're lucky or you're fortunate enough, you will continue to buy those companies that continually increase their dividend payments every year. Now, let's look at today's date. What happened today? So we're going to go on our Thinkorswim over to the Market Watch. Okay, and we're going to bring up today's date. Today is the 17th. Now, the 17th, as you can see, there's only 4 companies that were going EX today. So if you're going to collect these dividends, you'd had to have bought the company a couple of days ago. So let's quickly look and see what happened with these had you bought them when you should have. Okay, the 17th, in order to get in order to capture the dividend, you would have bought it on Tuesday. Excuse me, I am trying to get rid of this cold for quite a while. Okay, so the magic date we're looking at is Tuesday the 3rd, or actually it would have been Monday the 2nd, but I don't think there was any trading on Monday the 2nd. So let's take a look at the first one. CODI, 36 cents. Take a quick look. CODI. All right. So they had a high this year of 1943. That was back in the first week of December. The low way back January last year. The last 30 days is what we're looking at. Now we're looking for a minor, just 36 cents move from the 2nd, or the very first trading day, which is the 3rd. So we would got 1 day ahead of time, because 10 days, right? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, we would have got in on the last trading day of last year, which was December 30th. So from there, that's our 10 days. All right, we got in at the opening. That's day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8, day 9, day 10. You want to get out on the very last day, 10 days prior to. Very next day was dividend day. So the dividend opened up today on the 17th, but you would have got in 10 days earlier, which way over here, 12:30. Okay, so 12:30, she opened up at 17.75. Now, you want to look right here, this line here, okay? CODI This is looking at 1 year. There's the NASDAQ. This is the date. Okay, this is the opening price right here. Here is the high of the day. Here is the low of the day. And the next one would be the close of the day. All right, so let's go back here. Remember, we're looking for 36 cents. She opened up at 17.75, so 36 cents on top of that would be 18.16. Okay, so didn't make it on the first day. Next day, she opened up at 18, and the high of the day was 18.35. So you'd be out on the second day for Cody. Okay, now Horizons, I believe that's Horizons. Let's put that one in, and that's only 10 cents. That should be relatively easy. HRZN. Okay, had a high of the year right down here, 13.95 back in July 28th. And the low of the year way here, 9.26 on January 19th of last year. Okay, so the last 90 days, let's take a quick look. Last 30 days takes a little slump down here at the end of the year, then she shoots on up. But we're looking from the 30th, because the 30th would be 10 days. Okay, so 10 days ago, on the 30th, we would have got in at $10.30. And you would have been out the same day because the high of the day was 10.53. Okay. Suns is the next. SUNS. Okay, had a high last year of 17.06. That was in August 26th. And the low, 12.89, back in first week of February. So last 30 days. Let's take a look. Basically going sideways with a slight upward trend, not that bad. Okay, so the 30th right there, 10 days. The 30th just so happens to be a down day. Now Suns, SUNS, is only looking for 11.75 cent move, which is about 12 cents. So we're looking at a 12-cent move. Okay, so she opened up at 16.55. 12 cents on top of that would be 16.67. So the high of the day was 16.61. So it didn't make it on the first day. However, you can clearly see the second day she did hit a high of 16.74. So it did hit the target on the second day. Now Wednesday, the 20th, which is the 18th, which is tomorrow, there's 20 companies all looking to get to pay out dividends. So you'd had to have gotten these today in order to qualify to collect one of these dividends. All right, so I'm not going to go through these because there's 20 of them, and that's a lot to go through. However, what I am going to do, I'm going to go into the 19th and take a look at this. 18 of them there. Now, there's a possibility you can buy some of these tomorrow, collect a dividend, and then resell a little bit later. Now, I'm going to show you a couple pieces of software that I came up with that will allow you to do that. So let's pick out a few. Pick from. We don't want anything below 10 cents because it's not really worth chasing. I mean, really, 10 cents? You have to get an awful lot of shares in order to make it worthwhile. Now, MPEL is $1.32 per share. Now, that's kind of pricey if you think about it. But who is MPEL? MPEL is Melco Crown Entertainment. Never heard of them. Let's pull them up here. MPEL. MPEL. They had a high of, all right, we're going to skip this one. I'm going to tell you why. Had a high of 1996 back in November 18th. Okay, and the low of the year, July 7th of 1191. Now, why are we going to pass this one by? Because it's $11 stock. It's $18 stock, and they're paying a $1.32 dividend. Let's quickly bring it up into the. Now this one says the dividend is 3 cents. What? That's not right. It says the dividend's 3 cents, and this here says the dividend's $1.32. So I'm wondering who's right. Well, don't know. Let's go into some interesting software to see what we can find. Let's check out the chart. The chart is going to bring up Yahoo Finance. Yahoo Finance is going to give us some kind of indication. Now, This is the 10-year chart for MPEL. Okay, so 10 years ago, MPEL was at 1660. Okay, 1660. That was in February of 2007. And now she's at 1802. So in reality, that's not a good investment. 10 years ago, and it only went up $2 in 10 years. No thanks. Also, look, she drops down here in 08 like everyone else did. A nice climb all the way up here to $42. Okay? She was high in 2014 at $42.92. And now she's at $18.02. Something ain't stirring the Kool-Aid. Also, look at the dividends. They're only going back to 2014. So that's only like 3 years worth of dividends. So MPEL's not on our list. So let's get rid of them. Let's go back to here. Okay, so we're not going to do MPEL. So let's try HPT. Okay, let's put HPT. Okay, now 2016, check that out. 52 days, 60 days, 68 days to reach its goal. Oh, that's not good at all. And look, it didn't even reach it in 07 or 09. Ugh, I don't like that either. That's why we made the software. We made the software for you to see whether or not they've been hitting their target or not. And apparently these guys can't hit an easy dividend. And the dividend is not that great, is it? What is the dividend? The dividend is only 51 cents. It's a $30 stock. And in 2016, it took 60 days to hit 68 days to reach its. That's terrible. Anyway, so I don't like that. So let's get rid of the average. Let's get rid of the blue line, which is 2016, and put up the average. Okay. So if we'd gotten in 10 days prior to, she goes up a little bit in a couple of days, and then she comes down. Okay. She hits the dividend, she goes up a little bit, and she comes back down again, and then she goes up a little bit, and then she comes back down again. To me, I don't like that. You know, I want to see you get in, go up, and then you just keep on going up on average. I don't like these guys, so we're just going to pass these by and go on to the next one. SIR. Okay, let's look at SIR, see what they look like. SIR. Pull out the dividend there. Okay, SIR only has 5 years worth of dividends. Wow. 2013, 2014 don't look very favorable. That brings the average up to 10. So I'm going to pass on this one. Besides, I don't even like the way the chart looks. You get in, she goes down a little bit, goes sideways, then down, then she goes up, and then she comes back down again. Sorry, no thanks. All right, SIR didn't like GOV. Let's try GOV. GOV. Okay, what's going on here? Why can't I see the rest of that? Okay, it's not showing up. Alright, so let's try the other software. See what that says for GOV. Alright, GOV. Now this software I like a little bit better only because I can put a whole bunch of dividend stocks in here. This software right here gives you the averages over the last 10 years, one on top of the other. You can only do one at a time. However, software number one, I can do all of them. I can just put them all in and I can shoot them all out at once. Now, I don't like this one, several reasons. One, it's missing data up here, and you get zeros right there. And look, in 2011, it took 35 days. It's not that big a deal. All right, so I don't like that one either. So what I'm going to do, instead of going over one at a time, let's go over to our stock list. Okay, this you would have gotten just recently. Would have gotten on Monday. So let's take a look at who looks good. Look at this, AON. Okay, all ones and twos. Look at that, 1.2 days. So it's average in and out within 2 days. The dividend is 33 cents. The yield is 1.1. I don't know. All right, BMO has an average of 6 days. Doesn't make me happy. Has a yield of 3.6. I like that. Okay, it closed at 74, and the 1-year target is 72. I don't like that. Okay, paychecks. Now, I'm a little unhappy right here that they're missing this data right there. Okay, but on average, it's 7 days. The dividend is 46. The close was 63. The 1-year target of 58. I don't like that. Sorry, the close was 61. The 1-year target is 58. That's lower. That's not good. All right, this company right here has an average of 9. I don't like these zeros right here. I definitely don't like that 57. I don't like that 17. But, you know, we're kind of limited on our choices. We get 1.75 yield and a 9-cent dividend on a $21 stock. I'm not liking that one either. HAS, it's Hasbro. Day and a half. Why did they miss right here? Could be a missing data from the data stream. I don't know. But it's $83 stock. It's got a 1-year target of 86. The dividend is 51 cents. The yield is 2.4. And 1.5 million shares being traded. Okay, I can deal with that one. Okay, unfortunately, I forgot what it was. Here it is, HAS. So let's put HAS in. I'm going to put it in here, see what it actually looks like. It's prior to, the stock moves up a little bit. Okay. 2 days out, 1 day before, and then she drops as soon as she hits the dividend. And then from there, she recovers nicely and continues up for about 2 months. Well, 60 days is about 3 months. Okay, that's about 20 days, 20 trading days in a month. Okay, so I like this one. And this is HAS. So let's see what HAS is doing. HAS. Okay, so HAS had a high of 88.68 back in April of last year and a low of 67 back in January 19th. And she's basically hit the high area right in April and going sideways with a slight downtrend, and she made a nice recovery. So the last 30 to 60 days going sideways for a bit, and she had a bunch of down days in a row. 1, 2, 3, 4, 5, 6, 7 down days in a row. That's a week and a half. It's 5 trading days in a week. Well, 7 days, it's a week and a half down days. 1 good day, and then 5 more down days. Holy cow, that's a lot of red in this chart. Okay, so at the beginning of the year, she has a nice uptrend until we are where we are today, closing at 85.17. Right, so 85.17 for HAS. And 85.17, so no, that's not what we want to do. We want to bring up the calculator. Okay, so let's buy a bunch of those. 87. Was it $87? It was $85.17. Divide $85 and 17 cents will allow me to get roughly 600 shares. Okay, so let's do 600 shares. Percent, which is triggered by the opening sale. All right, click, and there she is. So this should cost us right about $25,000. And there we go. All right, so that's that one. That's a good one. As you notice, HAS has weeklies. Okay. Now I'd love to show you some of the weeklies, which I think I just might. There's not much going on, so let's see if there are any questions from anyone first before I go into that. We're going to jump onto some option trades because I like options. There's no huge amount of people watching and asking questions. So Hasbro, it appears from the software that it's going to be moving up. So let's show you the software one more time. Okay, so it comes up all the way up to 1 day prior to the EX date. It has a tendency to move up, and that's what historically is shown, it moving up within 1 day to the EX date. Now it hits the EX date, and what does it do from there? It comes down for a couple of days, and then it's a nice steady upward climb for 3 months. That's on average. Does that happen all the time? No, but on average it does. So let's quickly take a look. 06. Okay, she went up a little bit here. She came down for a couple of days, 2 weeks, 3 weeks, and then she went up. And then she came tumbling down. All right, so 07. 07, nice upward trend all the way out. 08, same thing, nice upward trend all the way out. 09, all right, 10 days in. She comes out, she drops down a little bit, drops, gets to the dividend, makes a nice little drop, comes up, makes another little drop, and then shoots up again back to the 60-day area. So, okay, so I'm making my money, and I'm also collecting the dividend. All right, so 2010, she went up for a couple of days, down, sideways, and then all the way back up again. 2011, a little bit of a roller coaster ride, but for the most part, she goes up, trends up. A couple of down days, down, then back up again, then back down again. 2012, nice jump in. She just goes up, then kind of like a sideways roller coaster. She goes up, down, up, down, up. All right, you get where I'm coming from. Basically, on average, she does what we want it to do. A couple of days in, she goes up a little bit, drops down. After 3 days, she jumps back up again. 2015, I like it. You jump in, she goes sideways for a little bit. It's a nice steady climb, sideways a little bit again, and they, way there, 60, 65 days, she's up right where we want it to be. 2016, what'd she do? Same thing, nice upward trend. All right, so on average, as you can see, she's going to go up a little bit right to a couple of days before the EX date, and then she's going to drop a little bit, and then steady, slow climb back up to where we want. So yeah, I'm going to do this one, and as a matter of fact, I think I'm going to do an option play for this week. Okay, today's the 17th. Okay, let me quickly show you. Today's the 17th. Tomorrow's the 18th. So I have 1, 2, 3 days of trading left for this week. So I am going to jump in onto the 20th, right here. I want to look at a little bit more than 4 strike prices. I want to look at 8. 8 should be good. Now, I want to do, for the spread, I want to do a vertical. I like vertical because I believe that this stock is going to either stay the same or go up within the next 3 days. Now, I have 2 choices. One, I could buy the 80, 85 spread, or I can buy this one, the 84.5, 85. 34 cents debit. I like that. That gives me a nice little bit of movement. All right, so let's try that one. Now, this is a debit. That means I have to pay for this one. Or I can do a credit, which is this one right here. All right, so a 15-cent credit, which is 84, 84 and a half. 84, 84 and a half. Right now she's at 85. That one, easy money. Or if I wanted to buy it at 85, 21. 15 cents for the 84 and a half, 84, 84 and a half, which means it'd have to close above 84 and a half for 15-cent credit, or have to close above 85 for a 21-cent credit. No, if I'm going to buy it at 85, all right. If I bought it at 10, it's going to be at 85, which is what I'm doing anyway. So let's get another 1,000 shares, which would be 20. Okay. Wait a second. That means, all right, so let's see what I'm looking at. All right, I'd have to put up 580 bucks and I'd make 360. Okay, let's quickly do a math. So it's 360 over 580. Let's clear that. 360 is what I'm going to profit off of this one. And I'm going to put up 580. And that's going to give me a basic return of 62.9%. That's a 63% return for 3 days. It's got to stay above 65 though. So let's quickly look at 64.5. Let's get rid of this one. All right, if I do the 64.5 at 15 cents through 20 contracts, 15 cents. I have to put up more money and I'm making less. But then again, there's less risk. I got 240 over 700. So let's do 240 over 700. 240 over 700 for a return of 34%. So I think I'll deal with the 34%, you know, because it gives me more room for error. All right, so we're going to do this one. It's going to give me a 34% return. And let me see if I can explain it to you slowly. All right, we're going to sell 20 vertical 8 Hasbro 20 January 17, which is this Friday. It's weird numbers. This Friday, the 84.5, 84 put for a 15-cent credit. What does that mean? That means my break-even point is 84.35. So it can go down to 84.35, which is way down here somewhere. That's my break even. Anything above that is all profit. Okay, so I'm putting up 700 bucks and I'm getting in return $240. Okay, and that is a 35% return. So as long as the stock stays above 84.50, right now it's at 85, so it's got to stay above 84.50, which is right here in the next 3 days. So what does that mean? That means if the stock goes up, I make 34%. If the stock goes sideways, doesn't move at all, I make 34%. If the stock goes down, it can go down as far as 84.50, which is 67 cents. It can drop 67 cents from where it is right now over the next 3 days, and I will still make 34% return on my money. Now, Hasbro we like. We like the company. It's a good company. Now, I've already got an order in for 600 shares doing the dividend capturing strategy. This strategy I'm about to do now is an option strategy, which allows me to catch more of a return on the same movement. Okay, so if there's a movement, okay, so we have up, make money, sideways, make money, down 67 cents, and I still make money. So that's kind of like a no-brainer, 34%. You can be greedy and go after the other one, but, you know, let's go for the 34%. Why not? Anyway, it's only been a half hour. My goodness, we still got another half hour to go. So what can we talk about now? Let's look at some more trades. So we liked Hasbro, and see what else we have coming up. Market Watch. Okay, so that's coming up for tomorrow. These ones right here. So you can jump in tomorrow to take advantage of these 18 companies. Okay, if you don't already own the software or are not part of our group where you get access to the software, you might want to think about joining so that you can take all these 18 companies here and stick them into the software. Okay, you can stick them into, not this one. This one only takes one at a time. okay, because it has all these charts. It allows you to see what's done on average. This software right here, you can put a whole bunch of different companies in here. I think the most I ever did, I think I put 100 shares, 100 different companies in here. It took a while for it to run through all the data, right, and get all the numbers, but it's so much easier. Just put the stock symbol in it, boom, you're done. Okay, so that's what I did with these companies. I put them through the software, and this is what's coming up for this week. Those right here, not the greatest in the world. However, this software here looks at something totally different. It's not available online. You can only get it as part of a member, and then you get it emailed to you in your email box. It comes up as an exe file, which allows you to find out how the stocks performed with the dividend capturing strategy right here, the double dividend strategy, and the dividends on steroids strategy. Okay, I usually don't trade anything unless it's in the 90s for the dividend capturing, because worst case scenario, I would prefer to use the dividends on steroids strategy, because you make 2.5% return. And that was the trade I just did a little while ago on Hasbro. Not the option trade, but the first trade, Hasbro. And I prefer to get the 2.5%, because 2.5% of 74 is a little bit more than 66 cents. Okay, if I can't get that, I can always go for the dividend capturing. Dividend capturing is always my fallback. Okay, absolute worst case scenario. If I buy BMO, what the heck? Let's take a quick look at BMO. All right, BMO. Love it. Look at that. Nice movement. Now, you would have gotten this Monday, so you get in first thing, which would be today. Okay, BMO, what did BMO have for dividend? Quickly look, 66 cents for BMO. Okay. BMO opened today at 74.82 and hit a high of 75.13. So it didn't quite hit the 66 cents today. Okay, hit 20, 18, 18 and 13 is 25, 35, hit 35 cents today. That's if you had gotten in first thing this morning. That's what I like to do. I like to get my trades in first thing this morning. So the trades I just did now are going to go in first thing tomorrow morning. And what are we looking at for tomorrow? Well, today being the 17th, tomorrow will be the 18th. So we'll be looking at companies that are going EX on the 1st of February. Now there's 8 of them. Okay, there's PFE, which is Pfizer. We all know that one. Okay, Pfizer. MUX is McEwen Mining. They're offering a half a cent dividend. I'm not quite sure. I'd even take a look at them. Okay, ARNC, which is Onconic. Never even heard of them, but they're only offering 6 cents. I wouldn't do them either because it's not high enough to make it worth my while. Whitestone Real Estate Investment Trust, only offering 9.5 cents. That's close to 10. It's really tough call to make. How much are they? Quickly, let's look. WSR. It's a $13 stock. And this is what they're looking at. Nice upward trend. I like it. Would I jump in for a 10-cent move? Why not? Let's do it. I mean, that's what we're here for. We're here to show you. Okay, this is just a practice trade. So WSO. Let's take a quick look at WSO. WSO. Okay. They have options, and they are monthly options. You got one coming up, which is 3 days away. Is it worth doing an option, or should I just buy the stock? It's WSR, WSO. Which one is it? Oh my goodness. Let's go back to that. WSR. Okay. Looking at the wrong one. WSR. Okay, so it's a $15 stock. We could not buy that one because that's 12.5. and they're only, all right, 155, so 12 and a half would be $1.80, which would be $13.50. That's not right. Yeah, actually, that's not bad at all. Okay, because you're buying the 12 and a halves. Okay, for that privilege, you're paying $1.55. So if you take $1.55 and you add it on to the 12 and a half, your cost would be 1405. Nah, that ain't worth it. It's 1405 is your break even. Okay, it has to hit 1405 before you even realize any profit whatsoever. So no thanks. How about this one right here? All right, that's $2.50. It's not even worth it. Right here, 10-cent credit for a hit 12 and a half. I don't know. I have to put up quite a bit of money in order to make that return. That's not that big of a return. So you got to put up $1,400 to make 70. No thanks. So do we want to just buy these? All right, let's just buy custom. And it's only a 10-cent move that we're looking for. Okay, now let's get out of here. What price was that stock? That stock was $13.91. Let's clear that. Divide 13.91. 3,600 shares. Wow. Okay. 3,600 shares. 3,600 shares. Okay, so let's take a quick look. Got 25,000, 3,600 shares. Buy 3,600 at the market plus 10 cents. That's only going to give me like $360. Okay, so that's $360. Okay, see if we make that tomorrow. All right, so that's WSR. That one was not bad. I like that one. What else are we looking at? TOO. TOO. Let's see what TOO looks like. Okay. TOO. And that dividend was towards the, actually it was February 1st, wasn't it? February 1st. There we go. Pull out the dividend. And here we go. Okay, look, it's got a nice little upward move. Get rid of the blue line by clicking on the average. Okay, so just before, on average, she goes up nicely. Up at 9 days, so 1 week coming into it, that's not bad. Drops a little bit, and then a nice steady climb upward. So we are going to get our dividend no matter what we do. So let's do that one. TOO. Now TOO, my friends, had a high of $7.24 back in April 20th, and a low of $236 back in February of last year. That's a nice movement from $236 all the way up to 7, which is 300% return. So she's at 603 now, and we're looking for 10 cents. I don't know. Let's take a quick look. Average of 8 days. Okay, those numbers aren't that bad. The yield is not in there. Can't calculate the yield. All right, let's take a look at software right here. Let's see TOO. Okay, go. I want to look at the 10-year chart on this one also. Wait a minute, 2016 she didn't pay out. So let's see what the chart looks like before we dump money into this one. I don't like low stock. I mean, not this low. All right, no thanks. Shh. Look at that. I'm not going to tell you why I say no thanks. Look, it's 10 years ago. This company was at 29 bucks, almost 30 bucks. What happens? 08, she drops just like everyone else did, so you can't fault them for that. And a nice slow uptrend up to $35 in April of 2014. What happened there? This baby shoots down like a rock within a year, or about a year and a half. Down to 2 bucks. Now she's at 6 bucks. So no, double no. Okay, no to 2. All right, so let's go back to TGP. I was just take a look at Pfizer. Everybody knows who Pfizer is, PFE. So let's do Pfizer for the last one. That'll be it. Pfizer. PFE. And let's plot the dividend, see how that looks. Okay, get rid of that by clicking on the average. All right, this looks like a no to me because 10 days prior to, she goes down, goes sideways for a couple of weeks, drops down a little bit, goes sideways a little bit more, then she goes up. I don't know, look at this. A couple of zeros there, 48, 48, average of 7 days. That's a week and a half. I'm going to say no to Pfizer, sorry. Let's take a look at the chart, see what Pfizer did. I don't know why I'm looking at the chart. I already said no. But just in case some of you guys are out there arguing amongst yourselves. All right, 10 years ago, Pfizer was at $24. Okay, well, $25. So $24.96. It's right around 25 bucks. Okay. And today, she's at 32. So 25 and 32, that's only $7. Okay, from 25, $7 is only 28%. Well, give or take a buck or two. That's not a whole heck of a lot. There's so many other companies performing a lot better. Okay, so let's say no to Pfizer. Didn't like it the first chart. Second chart just convinces me. Okay, so look at TGP. Okay, or PEGRY, PEGRY. Okay, let's try that one. PEGRY, and not enough data. Sorry. PEGRY, that didn't make it. PNFP, let's take a quick look at that. PNFP. All right, 3 years worth of data. Sorry, doesn't make it either. So right now, back to TGP again. I wanted to do TGP in the first place. All right, TGP, and plot the dividend. Okay, not 100% great, but I like this here. This is a nice strong movement, 10 days out, and she has nice movement all the way up right into the dividend. You can get your money and getting it out. However, after the dividend, she looks like she goes sideways with a slight upward trend. Okay, it takes an average of 11 days to hit your target. Ugh. Let's take a look at the other charts. 11 days, I can live with this. 2 weeks. 2 weeks to hit my target. Okay, I can deal. Now is where we say no. Okay, now is where we say no. Reason being, 10 years ago, TKLNG Partners. Okay, 10 years ago, she was at 37. Okay, she drops in 08, just like everyone else does, 08, 09. And then it's a nice recovery all the way 2014. Come on. All right, that don't make me happy. Then she drops down to 32, which is lower than that. All right, let me get rid of this. Try that again. Okay, so like I said before, 10 years ago, this company was at 37. She drops down to 08, 09, just like everyone else did. And she has a nice upward trend all the way to July 2014. Then something happened in the company. Slowed down fall to 2015, beginning of 2016. She hits a low of 1023, and she settled out at 1590. So I'm saying no to TGP. So basically, we only have one choice for tomorrow. All right, sorry, fellas. Only got one choice for tomorrow, and that's WSR. All these other ones, crap. Okay, that's what we get the software for. To discover which ones are good, which ones are not good, which ones you want to keep, which ones you don't want to keep. And, we're chasing 10 cents tomorrow. Is 10 cents a lot of money? No, it's not. But we're doing it over 3,500 shares. Okay, so 35 or 36, I think it's 3,600 shares. Is that right? Okay, so 3,600 shares, which is $360. So $360 for one day, I can deal with it. Other than that, we could look at MEP because that's coming up on Thursday. So we can do that one for tomorrow. So let's give that one a try. See what MEP looks like. MET, yeah, we got a few more minutes, so why not? Okay, MET, she got a high of 57.81 December, second week in December of last year, and the low February 8th of 35. Okay, she's settling right now right around 53.55. Now that's just a little bit of a slightward downtrend. Okay, and it's just ever so slight. So a lot of down days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 down days within the last 2 months. That don't make me happy. All right, so we want to put MET into the other software and see what it says. MET. All right, we're going to pass on this one because it only has 4 years worth of data. 1, 2, 3, 4, and the average of 10 days. Back in 2014. Had a very difficult time making it. So we're going to call it quits now because the only thing we got left to look at is Friday. Okay, Friday we had 3 companies, but we're going to look at that on Thursday. Thursday. And we're also going to be looking at weekly options on Thursday also. But for now, like I said, this is James. It is 9:49 p.m. Tuesday, January 17th, 2017. We ran through what looked good for today, what looks good for tomorrow, and 10 days from today we looked at a couple, but only one of them really came through shining star. So that's the one we put on a couple of trades today because those ones looked good. The software all gave us good indications that it's going to do what we want it to do. And if we're right, we're going to make a 36% this Friday on Hasbro, I think it was. HAS, yeah, Hasbro. We'll make a 36% return this week on Hasbro. And there's a possibility for us to get our dividends out before Friday also, because it hits our target. We're not looking for that much. All right, anyway, this is James signing out with 10-Minute Trading. If you're not a member already, sign up. You get access to the software. You can use it, and you can ask me any questions you need. And really quick, I'm going to check and see if I do have any questions of anyone hanging around. Oh, I'm using some of your income tax to buy dividend stocks. What are a few good choices? Subject change. How? High yield. Now that's a good one because sometimes, Graham, you have to look for the high yield is not always the greatest play to make. Look at the software. If you take the dividend, if you're taking the company you're thinking of, plug it into the software, see how it had performed in the past. Because sometimes giving you a high yield is nothing more than masking over a dog. It may be going down. It may have not good returns. It may not give you what you're looking for. There's a lot more data that you need to look at other than just the high yield. Just because a yield is high doesn't mean it's a good quality stock. How often have they paid the dividend? How consistently do they increase it? And more importantly, Is it a company that you don't mind holding for a long period of time? Take a look at the data stream. Take a look at what the dividends were they gave last year. What were the dividends the year before? What were the dividends the year before? Now, is this a high yield? Is it continuously high? Is it high all the time? Or is it just a fluke? You don't know. And that's the best answer I can give you. I can't tell you to do it. I can't tell you not to do it. Make the decision, but make it a wise decision. Look at historical performance of the company. Now, it doesn't mean that they're going to continue doing it that way. All it means is historical performance tells you that, hey, the company has been around for a while. They have a game plan. Everybody comes in, they punch the time clock, and everything should be good to go. Just because the economy's bad, do people still come to work? You saw some of the charts I showed you earlier about 08 and 09. Most of the stock valuations went down. However, a lot of the companies continue to increase their dividend payments. Okay, dividend payments over the history of the company are very important, because if the stocks go down again, you're going to want to know, are you going to get your dividends cut, or are you going to continue to have high dividends? That's the best way I can answer that question. Constantly look at the data, because there's no hiding the data. The data is what it is. If it tells you it's been paying a high dividend yield for years on end, fine, get it. But high yield does not equate to a good offer or to a good stock. It's just saying, they have extra money, they're willing to pass it on. Are they going to continue doing that? I don't know. Anyway, this is James signing out for now, and I will check you guys out back on Thursday, where we're going to do a lot more option trading on Thursday, and to see how we're recovered. So we're doing pretty good this year. We're doing a lot better this year, the start of this year, than we did last year. So this year we're going to look to break our 50%, because last year we did, I think, 56%. So this year we're going to try to break 56%. Anyway, this is James signing out. You guys have a great day, and I'll see you